Hello, welcome to Save US Taxes Legally. We're going to start off with three simple questions. In the chat, put yes or no. My first question, do you want to leave a legacy for future generations? Again, yes or no in the chat. Number two, do you want to save taxes year after year, generations after generations? And number three, do you want all lawsuits to become frivolous and just disappear? If you answered yes to all three questions, you're in the right location. Stay with me for the next half hour while I teach you the secret of the rich. Think of this. What if you could save 4, 5, 6 figures in taxes year after year, generation after generation? You could use this money to put back into your business, buy more investments. You could pay off your mortgage. You could buy a new car. You could take your family on a well-deserved vacation. You could give to your favorite charity, or you could save for retirement. What if nobody knows what you own, where you own it, how much you own it, how much you make, what you do with it, how much you sell it for? What if all lawsuits become frivolous? How much money, time, anxiety, worry just disappear? This is the power of the Spendthrift Trust. I want to share my documents with you. With the trust, this comes from England way back when King Henry VIII started the Church of England. Yeah, murder a few ladies, who cares? Start a church. He went to go tax the lords and ladies of England. They went further back to the Magna Carta of the 13th century. They came back to King Henry and said, this is contract law, you can't tax us. It came to the colonies while we were still part of England. The law firm I work on behalf of inherited a trust that turned 350 years old in 2023, before we were a country. Our current tax code went into effect February of 1913. It was only supposed to be around for a few years, I think 10 years, but unfortunately we got involved in World War I. The only thing that has happened since then is grown and grown and grown and grown. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, the Kennedys, made sure they could save taxes. Well, if they can save taxes, we can save taxes. Paul Benson was a Harvard law professor who wrote 5 specific trusts 77 years ago. We're going to talk about 2 of the main trusts here today, but I want you to know about all 5 of them. There's the business trust to save federal income taxes and no longer pay state income taxes. There's the beneficial trust for US investors. They will no longer pay capital gains when they sell something at a profit. They'll no longer pay interest income taxes if they're a passive investor. They'll no longer pay dividend income taxes if they're in the stock market. They'll no longer pay rental income taxes if they're a real estate investor. And they'll no longer pay royalty income taxes if they have talent or if they're in the NFT world. The third trust is the mineral rights trust. One of my beneficial clients inherited his granddad's horse farm in Oklahoma that had 6 oil wells on it. There's the charitable trust if you're a 501c3 company. Several of my clients have saved so much money, they wanted to start their own charities. And finally, there's the senior trust if you're over 65. I don't like that trust. If you have competency, I would not sell that trust. But with the trust, it's going to save you in 3 very important ways. It's going to save you taxes year after year, generation after generation. Keep your information 100% private. Nobody will know anything. And I can't stop you from being sued, but all lawsuits become frivolous and go away. So let's go over some information here. This is what the current tax code looks like. On January 1st of 2025, quietly, the IRS took, there's 4 ways to file your taxes. Single, the most expensive way, head of household, married jointly, and then married filing separately. On January 1st, the IRS changed married filing jointly to match single all the way up to 35% tax bracket. At 37% tax bracket, it's still cheaper to file married separately. If you get nothing else from this presentation, please, if you're married, file jointly. It's going to save you so much money to do that. Now, I want you to Google this information as much as you can. It's IRS Tax Code 643B, like Bravo. When you do Google this, you will find the IRS opinion letter dated September 11th of 2018. There's also 5 memorandums that I'm aware of that come from this opinion letter. The IRS specifically says they do not like Tax Code 643B. They do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. It's their opinion. In my opinion, I do not like lima beans. Do not make me eat them. The IRS has no control and cannot change the IRS tax code. Only Congress can do this. Too many presidents, too many senators, too many congresspeople, and too many rich people know about the Spendthrift Trust. Only thing the Congress is going to do is raise taxes more and more on the middle class. I don't have a crystal ball, but our Congress has not accomplished very much. They're not getting into tax codes at this time. So let's go over these 5 elements. Irrevocable means it goes from generation to generation. The Rockefeller Spendthrift Trust is 7 generations old and has 400 people under the same EIN, or Employee Identification Number, or Tax ID number. Each separate family files a 1041 tax return. They all keep their money separately. Next one, complex. This trust can hold money day to day, week to week, month to month, year to year, decade to decade, century to century. 97% of the trusts sold in the United States currently are, it's called the family trust or the living trust. My mom and dad had that. It avoids probate, and then it dissolves when the trustees have both passed away, or if there was only one trustee. This is not your mom and dad's trust. This is what the Rockefellers, the DuPonts, the Carnegies, the Kennedys, and our current president, Donald Trump, have. Discretionary. Whoever is the trustee or trustees can make the rules for the beneficiaries. While they're alive, and also from the grave. There's no infighting. There's no contesting the will. I actually have a client, a husband and wife, who have 4 apartment buildings in Los Angeles. Thank God none of them burned down. Their adult daughter lives in one of the apartments rent-free. They're requiring her because she's a beneficiary of the trust, to do 4 random drug tests per month so she can stay there rent-free. If she fails one, she's kicked out. She actually took her mom and dad to federal court to sue them, saying it was unconstitutional. The federal judge read through the trust, and he said she had 2 options. Option A, pass the drug test, stay living rent-free, or option B, move out, start paying rent in Los Angeles. I do not want to be invited to their Thanksgiving dinner. 4th part, non-grantor. This makes the trust completely private. You're going to have someone who is never going to be a beneficiary and who will never be a trustee sign up to be your grantor or your settler of the trust. They sign themselves up and they sign themselves away. This is not a speed bump, but you do need their social security number. I have done this for several of my clients. It's an easy thing to do. And then the last element, the spendthrift, has been in front of the United States Supreme Court on 2 separate occasions and has won both times. You can't get more legal than this. Now, again, the law firm I work on behalf of, Paul Benson, was a Harvard law professor. He wrote the 5 separate trusts 77 years ago. Not a single trust has ever been audited. Now his grandson and great-grandson run the law firm, and they're so confident in what they do, they will give you a certification saying if you get questioned by the IRS, they'll defend you free of charge. In 77 years, it's happened once. A business trust was questioned by a senior IRS agent. He flew down to Houston, where the law firm is, spent 5 hours in the boardroom, signed off on it, and wrote an unsolicited letter back to the law firm. If you want a copy of that, please reach out to me. Now we're going to talk about the business trust. This is for all U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, and U.S. 1099 income earners. If you're making at least $80,000 gross per year, you could be saving 5 figures in taxes. This is a client of mine who called me on January 3rd. He is a salesman in Virginia. He knew in 2024 he made $150,000 and had nothing to show for it. He single ladies, lives in an apartment with 2 roommates, and drives a 10-year-old car. If he makes $150,000 in 2025, 90% savings, he would save 25,000. If he makes $150,000 in 2025, his federal taxes would be $28,847. With the business trust saving him 90%, he would save $25,962 in federal taxes, and then he would save the 5.75% of Virginia taxes for a full year of $34,587. Per month, he's going to save, I believe it's $2,998 per month that he won't have to pay in either Virginia or federal state income taxes. He's taking his $34,587 he's going to save in 2025. He's going to put it for a down payment on a house. If he makes more than $150,000 in 2025, he'll save even more in taxes. If he makes less than $150,000 in sales income, he'll save less than taxes than that. But this is going to go from year to year, decade to decade. When he gets married and has children, when his great-great-grandson in 2095 decides he was crazy and cancels the EIN number on the trust, his great-great-grandson is responsible for any taxes saved in 2095. Anything saved in 2094, 2025, 2026, 2027, any other taxes saved, the great-great-grandson would never have to pay back. That's the business trust for U.S. business owners, entrepreneurs, franchisee owners, and 1099 income earners. Unfortunately, I cannot help W-2 income earners. Now, my personal story. I became a real estate investor in 2018 when my mom got sick. This was my first property that I bought, a bank-owned reverse mortgage that I bought for $20,000, and it finally went to auction on August 28th, 2021. I made $44,326 in profits, and at 24%, I got to save $10,368, and I took that money and put it into more real estate. When I bought this reverse mortgage, I bought it in my LLC in July of 2020. When I started both my business and my beneficial trust in September of 2020, I had to do 2 bill of sales. One bill of sale was from Sally's real estate team to Sally Gimmon. Second bill of sale was from Sally Gimmon to my beneficial trust. I went to my bank. I had my banker notarize both of them, and I had $10 in my wallet for consideration. He made a note in his bank book that $10 of consideration was made, and then I went home, scanned both of my bill of sales. I'm living in Phoenix. I sent to the attorney in Raleigh, North Carolina. The next day, the attorney in Raleigh, North Carolina asked for my first page of the trust. This was back in September of 2020, and when it finally sold on August 28th of 2021, he sent me, everything was in the trust, and I got to save the money. Now, the beneficial trust, like I said, is going to save the following 5 taxes. You'll no longer pay short-term or long-term capital gains when you sell something at a profit. So if you are selling crypto, if you are doing options trading, you're a forex investor, you are doing wholesaling, you're fix and flipping, you're doing auction houses or tax liens, that's short-term capital gains. Interest income taxes, you'll no longer pay them. So if you're a passive investor, you're in mutual funds, you are doing subject to real estate, you're doing the BRRRR strategy. I have notes where I'm the paper in the house. People pay me their mortgage, creative financing, seller financing, and forex investors. You get taxed twice. You'll no longer pay interest income taxes. You'll no longer pay dividend income taxes. So if you're in the stock market, you're a day trader, you're a futures trader, you're doing commodities or living off of dividends. Rental income taxes. If you have short-term rentals like Airbnb, vacation rentals, 5 doors, 10 doors, 20 doors, 100 doors, multifamily, apartment buildings, you are doing commercial property, or you are doing Airbnb arbitrage. Yes, you can move a property that is on a depreciation schedule into the trust. Yes, you can move a property that has cost averaging into the trust. Remember, all lawsuits become frivolous. So if the renter's dog gets out and bites the mailman can only sue the renter, cannot sue the owner. The one tax that's not on here is royalty income taxes. They're taxed a little bit less, between 10% to 35%. So if you are an actor, an actress, a musician, an author, an artist, you're in NFT world, you have copyrights, patents, or intellectual property, they'll be saving those taxes. This is just an example of someone making $50,000 in profit, how much they would save per tax bracket, depending on what your personal tax bracket is. My tax bracket went from 22% to 24%. And the same $50,000 at 22% is $11,000 in taxes. At 24% would be $12,000 in taxes. Now, long-term capital gains are a little bit different. They're a year or more and affect you when you sell your business, sell an investment property, or a baseball card. Adult son saw my TikTok video, contacted me. His mom and dad were selling a 42-year-old family restaurant that Jim and his brothers built back in 1986. On April 30th of 2023, they were going to sell it for $3 million. And at 15%, they got to save $450,000. They didn't have to pay April 15th, 2024. Or at 20%, it'd be $600,000 they would save. Jim said he was working with a business broker. His name is Sam. Sam had to change the contract. He said Jim's name on it. We had to change it to trust name. I told Sam about the business trust. Sam was going to make $30,000 off this one deal. He signed up to get the business trust, and I told him about my affiliate program. Sam turns around and tells Michael, who was buying this restaurant. It was his 7th restaurant in 3 different states. Michael was buying this restaurant. He bought a business trust, and Sam made $1,000 on that. I know I went over this a little bit fast. I want to keep this open for question and answering. If you would like to set up a 30-minute tax breakthrough session with me, it's www.thetrustisyou.com/scheduling. My free class on the Great Discovery. If you don't know about the Great Discovery, it's Six Sigma's answer to Kajabi in school. This class can be translated into 136 different languages. Maybe it's 126. I'm dyslexic. I get those numbers mixed up. I actually have a client whose first language is Mandarin, translate the class into Mandarin and set an appointment with me. So it works. But when you go out to SallyGimmon.com, you're going to get 3 articles from Forbes magazine I did not write. You're going to get 2 pages of case law to research this to our heart's content. And then you're going to get examples of clients saving thousands and thousands of dollars. I want to teach this to as many U.S. investors, U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, and U.S. 1099 income earners. This is the secret of the rich. I got a $94,000 tax bill in April 4th of 2020, and I spent 5 months researching this. Use my experience, everything else, so you can start saving taxes. This is legal. It's in the IRS Tax Code 643B, and it's been in front of the United States Supreme Court. The law firm I work on behalf of has been around for 77 years, and not a single trust has ever been audited. You can take this information and research it as much as you can, but if you want to start saving taxes, please set up an appointment with me. Thank you for watching my video. Have a beautiful week. Take care.